Okay, the next topic we want to cover in winning multiple offers is earnest money and title policy. Okay, so let's talk about earnest money first. What is earnest money? Basically, it's your deposit or your commitment to the deal. It's money that you put up at the execution of the contract. Usually, it's about 1% of the contract price. That's pretty standard. However, in multiple offers, you might consider putting up more earnest money. It is the money that it goes towards your down payment, but it's also the money you risk in the event that if you default on this deal, the seller could keep the earnest money. Or if for some reason you back out outside of your back out periods, that's the money you risk of losing that the seller gets to keep. And then they put the house back on the market. So again, earnest money is kind of like a deposit on the deal. It goes towards your down payment. So it's money you would have to put up anyway if you were to close the deal. So the more money you put up as earnest money shows your commitment to the deal. So I recommend doing at least 1%, if not more. And then of course you have to also understand that if you do back out of this deal outside of your available backup times, that you could end up losing that money. So that just shows your commitment to the deal. And of course, there are when if you do back out during those back out periods, which we're going to cover here in a little bit, you do get that money back. Now you may lose what we call option money that you put up, but you'll get refunded if you back out according to the contract in a rightful way. You'll get that money back. Now it may take a couple of days or a week to get that back from the title company. And your earnest money is made out. It's held at the title company. You make the check out to the title company. They hold it into an escrow account that when you do close, then that money is applied to the contract and it goes in as part of your down payment. So that's a big deal. Earnest money is a good big deal in showing the seller your commitment to fulfilling the contract. The next thing that happens is when you here in Texas, we use title companies to offer what we call title insurance. It's an insurance policy that ensures that they are going to run the title search to make sure there's no liens, make sure there's no clouds on the title. And then the only cloud, or they get those clouds cleared up, or those liens or whatever may be on it. Now, obviously, a lot of homes that are being purchased are going to have a lien by the mortgage company for the seller. That lien obviously will be removed once the payoff occurs to that seller. So, but there is a cost associated with title policy. Now, normally in a traditional market, that usually used to be picked up a lot of times by the seller. It's a mathematical formula how much that is, but that's an amount that normally would be picked up by the seller. But in this crazy multiple offer market, we are seeing buyers pay for that title policy. And if you want more details about how much that is, I can provide a link later on that shows, where you can figure out the calculation of how much title insurance is. But title insurance, who's going to pay for it? It could be anywhere from $1,500 on the low end of a house up to multiple, thousands of dollars on a higher end house. So, that's a big impact. Who's going to pay for that? That, like I said, it goes back to the net sheet of the seller. Does he have to pay for it, or is the buyer paying for it? So give that some consideration. That's a big deal in multiple offers. And then, of course, what title company? Now, most of the time, sellers or real estate agents have a relationship with various title companies. Either they've done business with them in the past, they've had good customer service with them, they know somebody at the title, they got somebody that are related to at the title company. Whatever the case may be, each real estate agent typically has a title company or two that they prefer to use. Now, title expenses are regulated by the state. So you're not going to get a better deal through one title company versus another. However, you are going to potentially get better service from one title company to another. So negotiating what title company you use, if the seller has a title company they want to use and it's a way to make your offer look better to the seller, by all means, let the seller use their title company if they are happy with them. And of course, who's paying for the title policy? Again, that's a negotiable thing. But if you want to make your offer to stand out, this is one way to make it more attractive to the seller, is to offer to pay the title policy. So next, let's talk about property survey and what a property survey is and how that could potentially offer a good value to the seller.